So let's continue with the series, everyone. Today I am doing victory series is going on. As you already know, the previous series was individual chapters and this is basically a blend of multiple chapters. So with this particular thing, first of all, if you like this session, then please like it, share it among your peers, and don't forget to subscribe to our channel if you haven't done it yet. This is all about our series, everyone. Today I'm covering the module B portion. Since I am done with the blended questions of module A, now I'm moving on to module B. The most important chapter, I feel personally, of the book is sources of finance, because this particular chapter opens up the area of not only the module B entirely, but it also opens the scope of understanding module C followed by module D. So this particular chapter is very, very important as per the examination point of view, as well as to cover the basics of all other chapters followed by this chapter, right? So as such, module A is separate, but module B, C and D, they are connected to each other. That's the victory series, everyone. Here comes the specific area. Okay, everyone, let's move on. What is the primary feature of equity shares? It represents the initial investment made by the promoter. It is divided into equity shares. It is owned solely by the promoter. It is amount remaining after selling all the assets and paying off all the liabilities. What's going to be the answer according to you? Everyone? What's going to be the answer? Chale, let's move on and look at the answer. It is divided into equity shares. Equity capital is converted into equity shares. Okay? Done? Chaliye. Now let's move on to the next question. What do you mean by the nominal value of each equity share? The value determined by the promoter, the value set by the stock exchange, the value for all equity shares or market value of the share. Nominal value is the one which is basically given in the books of accounts. But in the company's accounts, we show it there. What's going to be the answer? The nominal value is actually same as for all equity shares. This is the book value, everyone. Nominal value is the book value of the particular thing. Okay? This is the book value. Chaliye then, let's move on to the next point. What are the financial rights of an equity shareholder, everyone? Financial rights of an equity shareholder. Equity shareholder has the right to participate in voting, a right to appoint board of members, right to control company operations. They can dictate company policies, or right to income, dividend, or right to retain surplus in case of liquidation. I wish this C point would be there, but this is one of the major points which they do not possess at all. Or do they? Right to income or dividend and right to retain surplus assets in case of liquidation. Practically, though, what happens is, let me tell you about liquidation, everyone. When the liquidation happens, at that point of time, first of all, the government comes and government asks for their pending amounts. So first of all, you pay to the government. Then you pay to the debts that you have taken. Then you pay to your preference shares. Whatever is left goes to equity. So I think in the theoretical part, it looks really good that they have the right to income, receive dividend. Again, this is the leftover after the preference shares are paid. So yes, they receive income or dividend, but only if they have ample of income that they can receive the amount. And yes, even at the time of liquidation, if the company has enough, only then they will get it. Right to income or dividend, right to retain the surplus assets in case of liquidation. That's the answer. Done. Next question. How can equity shareholders exit their investment, everyone? By selling shares to an interested party, by transferring shares to the family members, or by redeeming shares directly from the company or converting them into debt securities. I think the converting them into debt is simply a point which I think I won't really look forward to. The point is why to become uh, an outsider when you are insider. Everyone, isn't it? That's one particular thing that really happens now. What do you think the answer is going to be? Then we talk about exit their investments. When you leave, you want to leave the organization, na, you will just sell off your assets to someone else. In terms of a public company, you will give this asset to someone else. You know? This is what we'll do now. The answer is by selling shares to an interested party. Then everyone, you will just give up your shares and give it to some other party. It's not about the anybody else, but I think it is of no use to become a debt of the company. If you want to, then you won't give up your equity and then buy debt. What is the maximum amount of capital that a company is authorized to issue? Maximum amount of capital, paid up, issued, authorized or nominal, or share premium. Paid up is the amount that people have paid. Issued matlab the shares which have been issued to them. Authorized or nominal is the one which has been authorized to them, which they have taken permission for. If this is the one they have taken permission for, then what's going to be the answer, everyone? The answer is going to be the maximum permission that you have taken for. Authorized capital, nominal capital, or this capital is also known as registered capital. Next question. Which part of the issued share capital represents the portion subscribed to by the public? Subscribed shares, called up share, paid up, or calls in arrears? Calls in arrears means the amount which the people are not paying, which means this is the amount which is actually pending. Paid up means the amount which they have actually paid. Called up means the amount which the company has asked people to pay. While subscribed is basically the one which they have taken. वैसे तो I think this question itself is very self-explanatory. The portion subscribed to by the public is subscribed share capital, right? That is subscribed share capital. Paid up share represents the amount of money a company has received from shareholders in the exchange of shares, the portion of shares subscribed by the public, the part of capital, called up capital, that has been collected from the shareholders, or the amount determined as unpaid by the management. Paid up share capital. Paid up share capital means the part which the people see. First of all, the company will issue. Public, do you want to buy the shares? People will say, yeah, I want to. That is called subscribed. Once people have taken up your share, that is subscribed. On the subscribed, the next part is paid up. The amount people pay. And if they do not pay, then it is called calls in arrears. If they pay in advance, that is called calls in advance. Then what's going to be the answer? Paid up share capital represents the amount of money the company has received from shareholders in exchange for shares. So company is issuing shares and company is getting payment for that, the amount, है ना? Done? Done everybody? चलिए, let's move on to the next question. What is the drawback of raising funds through equity compared to the other sources? Low cost of raising funds, higher expectations of returns from shareholders, higher cost of capital, or low risk of for investors. See, there is no low risk, but at the same time, people really do not expect the higher returns as well. Sometimes they are just putting money so that they can get a dividend or they can make a capital gain. Capital gain matlab they'll hold this and later on they will sell it. They're looking forward to that particular area. Okay. Then higher cost of capital is definitely there. This is one of the major problems. Why voting rights are with these people, है ना? We give the voting rights to the equity shareholders. So these people are slightly dangerous for the organization. How are they so dangerous? Simple reason that organization is looking forward towards okay, if there's equity and there is debt, the company raised the money through debt, put it in a project, the project grew like anything, these people became happy with that fact that the project is growing, they made immense amount of profit. The immense profit is first of all used to pay the interest and principal, and obviously we still have a lot of money left, which who will get the remaining amount? This unlimited amount will go to equity, everyone, because and then equity shareholder will always be asking for more and more, despite the fact sometimes he's not the one who's raising funds and giving funds to the company for growth. This money is basically raised by the debt and grown by the debt. Equity shareholder will come and say, Arre, I am the one who's taking the credit risk now. If the company is unable to pay, then this is going to put my investment on stake. So technically, I am the one who would be hit. What is the drawback of servicing equity capital compared to debt? Dividends to equity holders are tax deductible expenses. Dividends to equity holders are paid from post-tax profits. Interest on loan increases tax liability. Servicing equity capital results in lower overall capital. What is the drawback of servicing equity? But the equity shareholders have one problem. No doubt they get leftover, and if the leftover is a significant amount, they're really happy. Dividends to equity shareholders are actually not tax deductible. This is one particular area. Dividends to equity shareholders are paid from the post-tax profits. This is correct. After the company has got their income, they have paid their interest. Whatever is left from that amount, they pay to them. This is a post-tax profit. There is no interest on loan increases the tax liability. No. Interest on loan basically reduces tax liability because debt interest, not equity, but debt interest is tax deductible. Servicing equity results in lower cost of capital. Nope. So in this case, dividend to equity shareholders is only and only after tax. Actually, after tax, after making payment to the preference shareholder, whatever is left goes to our equity shareholder. What are retained profits usually referred to as in context with internal accruals, everyone? Non-cash profits, post-tax profits, profit after tax, or called PAT, or cash profits, everyone. What are retained profits usually referred to? Retained profits are the profits which the company makes a profit called the profit after tax. First of all, before tax is earning, before interest and tax, you pay interest and then you pay tax and you get profit after tax. From this profit after tax, what you do is you have paid, then you pay the preference shareholders, then you pay the equity shareholders. So retained profits is after making payments to all these people. Still, we have got a little money in our hands that can be used by the organization for future. That is called retained earnings. This is actually called the internal accrual or savings of the organization. That is non-cash profit, post-tax profit, profit after tax, or cash profit. What's going to be the answer? Profit after tax. Or from this, we deduct everything else. है ना? Done? Let's look at the next part. What is the distinguishing feature of preference share compared to equity? Preference share are spoiled brats of the organization. They are paid first while equity is paid last. Matlab, think about it. In terms of the organization, the risk takers are ultimately equity. Whatever is left goes to equity. They live on leftovers. ठीक है ना? Preference shareholders have higher voting rights. Preference shareholders receive fixed dividends. Preference shareholders have priority in liquidation over secured debts. No, debts are the first. First of all, we'll be making payments to the people who have given loans to the organization. They have more importance technically. Preference shares are more volatile in the market. Not really. These people, I think I'll go for preference shares once I'll be retiring at the age of 50, 60. Now people go for it. Equity is something that you put today and you will be keeping it for your retirement when you want to invest somewhere or do something else, because those are to be held for a long period. Preference and debt is basically the ones which are giving you safer amounts in the upcoming future. Preference shareholders have higher voting rights. No, they do not have any voting rights at all. They get voting rights if the company is defaulting from the last 2 years to make dividend payment. So technically, preference shareholders receive fixed dividends. This is the basic reason I said I think I'll be keeping it for my retirement time. And you'll be keeping it once you are looking forward towards the end. Acha everyone, if you haven't subscribed to our channel yet, then please go ahead and subscribe our channel right away, because it is very important to know all the latest updates about the CAIIB examination, isn't it? Okay, then other than this, if you haven't downloaded our app yet, then hurry up and download our app, everyone. Why I'm saying that you should download our app, because now by downloading our app you will find all the details of the examination and further everything regarding the content of CAIIB. When I was starting with the new batches, everything is available on these areas on the app itself. So before I end my session, everyone, let me show you where to go if you're planning to purchase our courses. Hurry up everyone, the time is ticking away. Simply, if you're planning for CAIIB, then go ahead with CAIIB June 2024 batches. The batches are here. The Mansal batches for the area of bilingual. Our batches AIM batch, which has started from 22nd of March itself, right? Then CAIIB Mahapack 2.0 is available for you. Click on the area of buy now. Use the code Y541. I think The best investment is Mahapack according to me. Reason? You get English medium, bilingual, both the batches. Then what's the specific part? You get compulsory subjects and you get all 5 optional subjects in this as well. Matlab you have time till May, review the particular courses, check it out, purchase the courses. Then test series available, all the ebooks available. Matlab ebooks of all the particular modules, even per chapter, the topic wise modules are also available. Then you get 5+ hours of Mahamarathon, 10+ hours of mini marathon, doubt classes, practice mocks. So you're getting so many things by just paying 6,500, and that too for 12 months, everyone. So I believe this is a good choice to look forward to. So if you are planning to do it, then hurry up and enroll in our courses. Don't forget to use the code Y541, everyone, as this is the perfect time. Utilize this time to the maximum and go ahead and enroll yourself right away. Chaliye. Thank you so much, everyone. Have a nice day. Bye bye.